All right, good Monday morning, everybody. I'm Marlon Bowling with you, your tour guide to the ag commodities. I am pleased to welcome aboard the president of Midwest Market Solutions, Mr. Brian Hoops. He joins us right now, and he, of course, is from Springfield, Missouri. So what are conditions like in that part of the Corn Belt right now? Did you get needed moisture over the weekend?
You know, Marlon, we were supposed to get absolutely nothing, and we got an inch of rain overnight. A lot of heavy winds along with it, so there's some branches down across the city, and some power lines are down, people without power. So you hate to hear that, but yeah, much needed moisture. It's probably a little too late for some of the corn, but the double crop soybeans are really going to be beneficially impacted by this. This is just perfect rain for them. So there was actually a lot of rain across parts of Nebraska and just came down that I-29 corridor. Almost following the interstate in the Missouri River down from South Dakota, Sioux Falls area, all the way down into this area. So maybe not a real wide spread of rain, but clients in the Omaha, Council Bluffs area, so they received some good rains. Kansas City received some good rains yesterday as well, or overnight anyway.
Well, we heard earlier, Christina was kind of running through some prices from overnight, and you could tell that we had some steep drops. Now, we did get a news tidbit from USDA just a couple of moments ago, and I want to share that with everybody. Yeah, we had some overnight sales business again. In this case, it'd be over the weekend. And, well, imagine that. We sold 132,000 tons of soybeans to China, specifically to China, not unknown. And also a bit of a surprise, soybean meal, an even larger amount, 183,300 tons of soy meal sold to the Philippines. Now, in both cases, these are for the new crop marketing year. Tell me about that. Was that a big surprise when it comes to the soybean meal sale?
Yeah, I think the meal is a little bit of a surprise, but not a big one. We go back to Argentina having a drought through most of the spring. It just curtailed their production levels to a point where they're not able to export a lot of meal. And so some countries are turning to another source for their product, and that would be United States here. They're turning to U.S. for that meal. So I can't say it's a major surprise. Our soybean meal exports have been very strong this year. That's great and will continue, I think, as we go into the fall months here. The soybean sale that we saw, that's to China once again. Now, they've been a very active buyer over the last 2 weeks, and they're continuing this. Now, these purchases are for October through February timeframe, so it's nothing that they're going to ship out right away that they need immediately. So it doesn't have much of a market impact. It's like we talked last Friday. This is basically a free look at the market here the next 45 to 90 plus days for China to see. The prices fall off sharply. If they do, they can cancel these purchases, buy at harvest time, buy cheaper. If they go up, they're locked into these purchases, and they get the benefit of that. So it's a look at the market. I don't think the trade's really going to care. We're focused on technical action, of course, what's happening overnight, and also these rainfalls. And a lot of rain came in areas better than expected. As I mentioned here in Springfield, nothing on the radar maps or even forecast over an inch. That happened in quite a few areas over the weekend.
I'm glad you mentioned that, because this morning, as I was reviewing all the data from over the weekend, I did come across a video that was posted by one of the private weather forecasters out there. And he kind of put a bit of an apology video together. He said, I have to be honest with you. He said, and he showed both examples, the GFS model and also the European model. And they both just sparsely had any rainfall in the forecast for the Western Corn Belt over the weekend. And like you say, it turned out it was a broad area all the way from central Nebraska into western Iowa and all the way down to where you are, Brian. Pretty widespread coverage of heavy rain. And to quote him, his exact words were, the models suck. He said he said this whole year they have been as bad as he has ever seen when it comes to projecting out for a couple of weeks. And fortunately, in this case, the rain is much heavier, and it has turned out to be that way several times this year than what the models had forecasted. So let's hope that's a trend so far. And he cautioned everybody not to read too much into the models because they are not all that reliable, but they are talking about quite a bit of rainfall over the next 10 days. So now, does that mean you have to take that with a grain of salt?
I think I saw that same video this morning. I watched that as well. And so I know who you're talking about. The 6 to 10 day models that you mentioned, they are calling for below normal temperatures, normal to below normal for most of the Corn Belt, and normal to above normal as far as rainfall throughout the Corn Belt. So it's a kind of a bearish forecast. If this forecast comes to fruition, it's bearish as far as price structure goes, because it's exactly what corn and soybeans need at this time. We're filling out the ears, we're filling out soybean pods. They want a little bit cooler temperatures and some rainfall during that time frame. And so if this pans out into mid-August, it's really going to help our yield potential for both corn and soybeans, especially in some of these areas that are dry. And I have heard reports from people who missed out on the rains, had a lot of heat. And so that corn, soybean crop really starting to struggle and suffer. But there is some good areas out there as well.
All right. Well, as Christina mentioned, we had everything sharply lower this morning. So we'll see if that follows through into the open. We had big time losses. Corn was down like 14 cents this morning. I believe soybeans were down about 28, and the wheat market was down very large amounts too, about 15 to 20 cents this morning. We'll come back in just a moment, and we'll talk a little about our livestock trade right after this. Okay, now I was talking about how he closed in the grains and some of the prices that Christina was talking about. Let's take a closer look at this with a little help from Brian Hoops, and he is with Midwest Market Solutions. So let's take a look at the corn market from overnight, and wow, was that a lot of pressure. We had the September contract down 14 1/4. It was at 506 3/4, and December new crop was down 14 1/2 at 515 3/4. Pretty close to the low of the overnight trade, within a couple of pennies there. Now, if we move over to the soybean trade, wow, look at these losses overnight. September down 28 1/2 at 1404 1/2, and November down 29 1/2. We're at 1353. Now, I want to bring Brian back into this conversation here. When you look at these prices, like on soybeans here, these markets, the overnight trade, the Globex, settled before this new announcement on the export sales, right?
Yeah, they did. And I really think they're going to have very little influence on today's pricing structure. We actually gap lower in corn and soybeans overnight, and continued to find some weakness. Now, maybe we won't find a lot more selling pressure. I mean, 30-cent losses in soybeans is a pretty big move, and maybe we'll try and go fill those gaps. But, we've been pointing out on your program here the last several weeks to be defensive on rallies, and we saw corn hit its 62% retracement, soybeans contract highs. Wheat hit a potential double top on the Russian news with Ukraine here all recently within the last week or so. So there's been marketing opportunities, and these markets are swinging pretty large. Whether you've done futures hedging, cash sales, or even some options, there's been some opportunities out here for producers to get themselves protected from big moves such as this.
Well, now that you mention that, on Chicago wheat, big time drops there. You have September down 21 1/4 at 683, December down 19 3/4 at 708 1/4. Which one of these has more volume nowadays, Brian, September or December?
Well, it depends on what contract you're looking at. Chicago wheat is probably September, more volume than December. It may be the opposite of that for Kansas City, but for corn and soybeans, it's the new crop that's getting most of the attention. It's December corn, November soybeans.
Okay. So in Kansas City, you have September wheat down 15 3/4, but that December you were talking about down 15, and we're at 854 1/4. Also on the spring wheat trade in the overnight session here, you had that September down 15 1/4 at 880 3/4, December down 16 1/4 at 890 3/4, and we'll get new crop condition updates this afternoon on the spring wheat, right?
Yeah, we'll get crop conditions this afternoon. Trade's kind of expecting 1 to 2, maybe even a 3% drop across the board in corn, soybeans, and spring wheat as well. So, I don't think that's going to be traded. Market's already looking ahead to the next 10 days or so of forecast for better growing conditions as far as cooler temperatures and more rainfall potential.
Talk to me about the livestock trade, how we ended up last week. From what I can gather on the cash market, everybody was waiting for something to happen. They waited until the markets closed on Friday, and nothing happened yet. Did it finally happen Friday afternoon, or what took place?
No, pretty limited volume. There was some trade in the north at a couple dollars higher, 295. Some 179 trade in the southern plains. That looks to be about a dollar weaker. And I have heard some reports of a lot of death loss in parts of Nebraska. So trying to confirm that at this point. But right now, it does look like, the cash market's virtually untraded last week. It's going to be extremely hot again across the plains. I looked at Wichita, for example. They were this week well over 100 degrees Monday through Friday of this week. Not ideal conditions for the cattle. So probably going to be very limited movement once again. And then also Friday, you have option expiration for August live cattle, and first notice day is a week from today for live cattle futures for that month of August.
Well, now, you and I were talking about the fact that it's going to be fairly mild in the northern half of the Corn Belt. But I don't know if that cooler air is going to filter down into the southern plains. It sounds like the heat will remain on there for at least a couple of weeks, won't it?
Yeah, absolutely. Yeah, it's going to be, over 100, 103, 105 in Wichita all this week. In Kansas, Oklahoma, it's going to be extremely hot down into Texas. Here where we're at, it's going to be upper 90s to 100. So it's not great conditions, and it's going to be very humid, and that does produce that instability in the air where you can get some rain showers. But it's going to be a very hot week for those cattle producers this week.
Well, let's take a look at how we ended up in the prices last week. And so we'll take a look at these quotes provided by Bar Chart. On live cattle, you can tell we were higher across the board, but it wasn't all that much. I mean, it wasn't overly impressive, Brian. You had the August up a dime. October was up a dime at 179.60, and December up 20. Now, which of these would have the most volume these days?
Yeah, August is going into that delivery period, as I mentioned. So most of the volume is out of that contract. October is considered the lead contract. December is the next most actively traded. So those are the ones that are getting most of the fund attention. First be October and then December in that order.
Okay, so let's switch over and talk about the feeder cattle then. Now, we had bigger gains there on Friday, led by the August. That was up 95. September was up 70 at 248.97. Same thing here. Would you be leaning more towards September?
Yeah, as far as the volume goes, most of it's in September right now, that front month, and then October. August, still has another month or so to go before it expires. It expires on the 31st. But again, that's this cash settled contract against the feeder cattle index. So that's going to really track what that index is doing. Most of your fund activity, your commercial hedging interests are not in August. They're in September, October, maybe out into November as well.
And finishing up on lean hogs, we wrapped up last week with all the strength on the nearbys. August was up $1.17, but I guess your leader was October. It was up $1.77 at 85.02. We'll see if they can follow through in this Monday morning trade. Well, Brian, great to visit with you. Thanks for all the help this morning. Excellent stuff. Brian Hoops of Midwest Market Solutions with us. So, Christina, the market is ready to go on a Monday.